it takes most people 12 to 18 months of, working nights and weekends before they get their first property. So if it's something you want to do, you got to make sure that you've got a big enough, why that you're going to be able to put in the work.
Are you looking to achieve massive success in your life without dealing with costly investment nightmares? If yes, then this is the podcast for you. Here, we provide engineers and busy professionals all the secrets and strategies to create multiple streams of income, build generational wealth, and live a meaningful life by design. Here's your host, Ted Patel.
All right. Welcome, Decoding Cash Flow listeners. Today we have Brian Briscoe. He is a full-time apartment investor with an interest in over 1,100 units. He's also a multifamily coach and a mentor, founder of Streamline Capital Groups, as well as the director of multifamily educational community, the Tribe of Titans. He's the host of Diary of Apartment Investors podcast, and he has served in U.S. military for 20 years, and now he's retired. Thank you for your service, Brian, and welcome to the show.
Thank you very much. Appreciate you for having me on the show.
Yeah. So, Brian, before we get started, right, I would like to remind our listeners about, what the Decoding Cash Flow podcast is all about. Here on Decoding Cash Flow, we not only focus on the real estate investment strategies, but we like to provide a holistic approach to decoding the personal growth also, in addition to their financial gains. So with that said, let's get started. And to start with, if you can give a little background about you, what's your story? What's your, how did you get in real estate? And what currently are you doing? What's your main focus as of now?
Yeah. Well, hey, thanks. Yeah. So background, I was born and raised in Salt Lake City area. Got 2 degrees from the University of Utah, and I'll come full cycle about why that's important later. But started a PhD program in math. I thought I wanted to be a college professor, and shortly after starting the PhD program, we had the September 11th terrorist attacks. And so that for me was, I guess it pissed me off, but that's where I decided to go active duty. And, it was originally supposed to be a 3.5 year, obligation in the Marine Corps. And, 3.5 turned into 6, turned into, 10. And eventually I went 20 years. But so I retired. Official retirement date is October of 21. But I had enough, paid time off built up that I was really out the door in like May or June. But started buying real estate in 2007. Pre-crash, by the way. 2007 was probably the worst year to start buying real estate, but I ended up doing pretty well with it. Just had to hold it a little longer than I anticipated, but bought in 2007, market crashed. We had tenants in there. They were paying, I had a fixed rate loan, 30 years on it. And, so it ended up working out perfectly. But while I was active duty, I started picking up single family homes as often as I thought I could. I wish I would have done it a lot more and faster, but it gave me kind of like the baseline for what I'm doing now. I started to understand, how leverage works. I started to understand how, inflation, pushes rents up, year over year. I started to understand like a lot of the dynamics that, as far as why real estate's a good investment, and eventually wanted it to do it full time. So started looking into how to make that scale, and eventually landed on multifamily. And that ended up being what I decided to do for scaling, to turn, a handful of single family homes into a business. Ended up selling the single family homes to help, fund a new business. So tapped into the equity that I had accumulated over the years, and paid for some coaching. You know, it wasn't cheap, but paid for coaching. And that really, I think, was a catalyst. It helped launch my career as a multifamily guy. I was still active duty. So, you know, my goal was to, you know, get into the coaching program, learn the business quickly, and, you know, within a short period of time, be able to leave my W-2. And that's what ended up happening. I mean, me leaving my W-2 was called retiring, you know, and so yeah, retired from the Marine Corps in 2021 and been doing multifamily full time ever since. So that's kind of how I got to where I'm at. Right now, my current focus is, you know, back where I grew up. I think, you know, a lot of people when they're starting out, you know, they start thinking about what market do I want to, you know, buy in? What market do I want
Yeah.
to own in? And, you know, I had always thought, man, I really love Salt Lake. I love the dynamics there. And funny thing is, you know, when I was growing up, I thought, you know, Utah was the most backward place in the world. And some people might share that opinion, but, you know, the more I travel, I've been to almost 40 countries and almost every state in in this country. But you know, the more I travel, the more I thought, you know what, Utah is awesome. It's a great
Yeah, it
place.
is. It
But
is. It is.
yeah,
Yeah.
so that's my focus right now. Hired a couple of people this year, and we'll probably hire a couple more in the next, you know, 6 to 12 months. But we're currently looking for primarily B-class properties in the greater Salt Lake area. We are syndicating those properties, but what I'm trying to do is a little longer term hold model than what a lot of people are doing right now or have been
Mhm.
doing. You know, instead of the 3 to 5 year hold, you know, we're looking at, you know, doing a refinance in that 3 to 5 year mark,
Mhm.
returning investor capital, and then just, you know, pushing, you know, keep on
Okay.
operating the property and keep on paying, you know, our investors distributions over time.
Infinite returns.
Yeah, infinite return model, you know,
Yeah.
or
Mhm.
for the single family, bigger pockets, you know, made the Burr method, you know,
Yeah.
popular. But yeah, we're essentially doing a Burr on multifamily.
Multifamilies. Yeah.
Yeah. So
Absolutely. All
yeah.
right. That's awesome, man. Very interesting story. While you were, also serving the country, right? How did you find time to, manage all this real estate investments?
Yeah. You know, that it wasn't easy.
Yeah.
Typically I would be in one spot for 3 years, and
Hmm.
it was like every other 3 year period, I was either in a job where I was deployable, meaning, you know, I can go anywhere, you know, in the world at a moment's notice. And
Hmm.
then the next 3 years that put you in a job where you weren't necessarily deployable, right? So
Yeah.
when I was deployable, you know, a lot of times, yeah, I deployed a lot, you know, it was um either getting ready to go, and most of the deployments were Middle East, Iraq, Afghanistan. But yeah, either for those periods I was, you know, gone a lot. But my last 3 years I was stationed at the Pentagon. I had for the most part like an 8 to 4 type job. And that's what allowed me to kind of do it. So it was a lot of nights, it was a lot of weekends. It was I did public transportation. I took the metro into work every day. I did a lot of, you know, multifamily underwriting, you know, communicating with brokers, investors, writing content, doing all that stuff, sitting on the DC metro system. So yeah, it was basically look at my schedule, find every minute of time that I had possible to dedicate to real estate. And that's what I
Yeah.
did. Yeah.
Where there's a will, there's a way,
Yeah,
right? Yeah,
absolutely.
absolutely. And like any specific reason you just dived into multifamily? Like there are many other assets, right? What pulled you just in the real multifamilies in real, especially in real
So
estate?
I think up front, it was easy for me to understand. You know, I
Okay.
mean, a lot of people are fans of triple net leases, but
Mhm.
you know, with multifamily, you're number one, you're looking for investors.
Yeah.
Most people in this country have lived in apartments at some point, you know, and so it's not something that's difficult to understand, you know. So I think it's a lot easier to get an investor on a multifamily property on an apartment complex than it would be on a retail store, because it's something that people naturally understand. And when you take that to kind of the next level, it's also something that provides a basic need, so there's always going to be demand for multifamily. I'm mid-40s right now. I mean, in my life, I saw a shift between, Main Street to the big box stores. And then I saw the shift from the big box stores to like the Amazon.com model.
Yeah.
So, just looking at like retail, for example, and industrial, for example, I mean, those have kind of been up and down.
Yeah. Especially during the COVID period, right? Recently, what
Yeah,
happened to the
absolutely.
office space and retail centers? Many of
Yeah.
them are just vacant, and they're still vacant.
Yeah, so that's what really drew me to multifamily. I mean, I didn't have at the time. I mean, pre-COVID is when I got in, so I didn't have the COVID, bullet points.
Yeah.
I mean, it reinforced everything. It's like, yeah, I
Yeah.
made the right decision.
Mhm.
But yeah, I think it's a much less volatile part of commercial real estate, um, and it's something that I think it's a little easier to see how you help people. You're going in, you're making apartments look nicer, you're affecting how people live. So
Absolutely.
when you invest in the other things, you're helping your investors, you're helping business owners, but I think there's a lot more tangible evidence that you're really helping people with what you do.
Absolutely.
Yeah.
And as you said, right, in multifamilies, what's your main role? Are
Mhm.
you are you mainly into investors relationship, or in you take more part in operations of the property, or
Yeah.
um, or
Question.
acquisitions, or where what's your main focus?
I've played every role before, and I think when you kind of bootstrap a company, you start out wearing a lot of hats.
Yeah.
Um, I've been fairly successful in what I've done. We've come full cycle on, 7, 8, by early July, I think we'll come full cycle on our eighth property, so
Mhm.
made a fair amount of money doing that. Um, where I'm at right now is I'm hiring people to do all those jobs.
Yeah.
It's one of those, just from an economic standpoint, you go out and find a partner, which when I started out, I didn't have the money to hire anybody. It wasn't even an option. It was find a partner, share the load, bootstrap it. But where I'm at right now, you know, I have a lot more control in everything that I'm doing. If, I'm in charge, I'm paying salaries, everything else. So from a
Mhm.
control point, what am I doing right now? I'm building a company is what I'm doing. And, hiring the right people to perform the roles. And then I started talking about economics and then went on a tangent. But from the economics, I mean, if you partner with somebody, whatever your percentage ownership in the property is, you're splitting it in half and sharing 50-50 with a partner. Um, the way I'm doing things, yeah, I have payroll, which uh, I mean, if there's not enough money coming in, that can be stressful. But at the same time, when we close on properties, I'm not splitting. Yeah, we do have to bring in other people to help us close, sometimes help on a capital raise. I've got a partner that, helps me qualify for loans on a lot of things. So yeah, we're
Yeah.
dividing up the pie a little bit, but yeah, I have more control and I get a bigger piece of the pie.
Mainly acquisitions, right? As you said, like
Yeah.
focus.
So
Yeah.
yeah, right now we were in acquisition mode. So the company I'm building, we haven't acquired anything yet. So like I said, other partnerships I've been in, we've come full cycle on 7.
Okay.
In the last year or so, I've partnered on another, 5 or 6 different properties.
Mhm.
But yeah, now it's my primary focus is building this company, buying properties in Salt Lake City or the greater Salt Lake area, and making sure that we can manage it.
That sounds great, man. Hope you find deal over deal. Yeah. As we before this podcast, we talked about the new deal that you just signed up, right?
Mhm. Yep.
Uh, that's great news. Maybe if
Thank you.
how did you find that deal? If you can tell our listeners,
Yeah, that broker, all the
Yep.
deals that we normally do, yeah, we are finding through brokers.
Mhm.
So yeah, we put a lot of emphasis on the broker relationship and trying to um yeah, trying to make sure that we're top of mind when they have new deals. So
Mhm.
what I want to see is, brokers emailing or brokers calling and say, "Hey, I haven't shown this to anybody else yet. Take a look at it. Tell me what you think." That's our ultimate goal. So
Yeah.
yeah, we're doing a lot to work with brokers to I guess wine and dine them, so to speak. We try, but um, focus is just building really solid relationships with brokers because, brokers, it's their business to know a lot of owners. And I think we're going to get a lot more traction, going through the brokers in any other way.
Yeah, absolutely.
Mm.
It just once you have a good relationship, they're gonna send you
Yeah.
off-market deals. They'll
Mhm.
give you the whisper price,
Yeah.
beforehand. So yeah, it's
Yeah. And they'll fight for you too.
yeah,
I
they'll
mean,
fight for you.
yeah. So yeah, they'll help sellers. I mean, yeah, they'll fight for you,
Yeah,
you know.
yeah.
So yeah, that's really it. We're
Mhm.
focusing on relationships with the brokers for that.
Sounds great, man. And any specific criteria that you have in mind, like while underwriting the deals,
Mhm.
uh, uh, if you can give us like some of the basic criterias
Mhm.
that you look towards.
Absolutely. Yeah. I think the number one thing when a deal crosses our desk is we ask the question, is this something that I would want to hold for 20 years? All
Mhm.
right. That's the first criteria, and I've done a lot of C-class value add, and in a previous partnership, there were a lot of things that the partnership agreed to purchase that I wasn't 100% excited about. Some of them were
Mhm.
just like, let's hurry up this value add and sell it. But I mean that's what I was thinking when we purchased the properties. But yeah, I mean, yeah, first question on the list is this a property that I would want to own for 20 years? And then of course the numbers have to work, right? I
Yeah.
think most people right now, if you can't hit, 15% IRR, it's going to be hard to attract investors. But when we do our underwriting, we're underwriting things to 20 years. We had to build our own model to be able to do that because none of the, off the shelf models do that. But yeah, we underwrite to 20 years, and yeah, we're doing that, like I said, the Burr method, where it's gotta be, the dynamics have to be there to try to be able to return 100% of investor capital in that 3 to 5 year mark,
Mhm.
and we've got to have a fairly strong cash flow after that. So that's really what we're looking for. And if we can hit that 15% IRR over a 20-year period, we're going to make a lot of investors happy.
Yeah. So now that's one of the good strategy, right? To keep it for a longer period in return the investors the money. But when you are an active investor, right? Active multifamily investor, for most of the investor, the major or the main part of the paycheck comes when they disposition the property,
Yep.
right? So do you think how would you relate that to the long-term holding?
You know, um, yeah, and so when you're active in it, I think there's sometimes a disconnect between, what's good for the investor, what's good for the syndicator, right? I
Yeah,
mean, I've been in a lot of deals where, there's pressure in the partnership to sell because that's when we make money.
yeah.
Hey, if we sell this project, I had one partner that's like, "Hey guys, I'm underwater. I'm trying to do this house renovation. I owe contractors all this money. The bank loan didn't come through. Let's sell." And that doesn't sit right with me, right?
Yeah.
There's an incentive for syndicators to sell early, but really I want longer term investments for myself. And so for me, this works perfectly. I'm doing okay now. I mean, we do make money from the acquisition fees, and we're doing well enough from, acquisition fees and from previous investments that, I we're okay is the
Yeah.
answer. And what I'm really focused on is the long-term growth. I'm focused more
Yeah.
on 20, 30 years from now. Fortunately, like I said, we've done fairly well with our investing up till now, and over the last 5 years built finances up to the point to where that's what my focus is. I want to build generational wealth, and I want to find properties that are going to be really good investments over a 20-year period.
Just build up, add doors, right? Nothing,
Yeah.
nothing to sell.
Add
Because
cash, add cash flow streams,
add cash flow
that's
streams.
what it
Yeah.
is. It's, and of course you have to add doors to do that, but
Yeah.
yeah, the door count doesn't really, interest me too much, but the cash flow streams, I mean, yeah, that is very interesting.
That's interesting. Yep, absolutely.
Yeah.
All right. Like, um, for like you have been Marine, right? And you
Yeah.
started investing in real estate. You had full-time job, I would
Yeah.
say, right?
Mhm.
So, and what would be your advice to our listeners who want to get started in real estate? What is the first step that you think they should take
Mhm.
and progress forward?
I would say figure out your why, figure out why you want to do it.
Yeah.
It's not easy to do multifamily. For most people that I've talked to, and then, I've got a podcast too, so I've talked with a
Yeah.
lot of people on this exact subject. But it takes most people 12 to 18 months of working nights and weekends before they get their first property. So if it's something you want to do, you got to make sure that you've got a big enough why that you're going to be able to put in the work, right?
Absolutely.
So
Yeah.
ask yourself why you're going to do it, and fuel that why. And if your why is not strong enough to last for 12 to 18 months, you just don't start. I'll be honest, just don't start. But yeah, make sure you have a strong enough why, because it's definitely a marathon. It's going to take you
Yeah.
a lot of time to build up, your credibility, to be able to attract money, and it's going to take a long time to be able to get brokers to start paying attention to you.
Absolutely. And to add on top, right? Maybe I'll just add, uh, do your own research,
Mhm.
right? Read books, get educated, but don't
Mhm.
be in analysis paralysis mode. Just get
Yeah.
started somewhere, because you don't want to wait for everything to be perfect
Mhm.
before you get started.
Yeah.
It's not going to happen. You're always waiting for 100%, and it's never going to happen. Just get
Mhm.
started,
Yep.
and as you go along, you'll find your own ways. If you if you if you are new, if you have someone whom you know who is in real estate, just partner with them just to get
Yeah.
started, right? Or maybe like people like me and you who are already in
Mhm.
real estate, right? Just
Yeah.
I would say join hands with them, start, because I started investing as a passive investor,
Mhm.
before I got actively involved in multifamilies and,
Yeah.
construction business. So that was the way I got started.
Yeah.
Just invested passively, tried to learn how things work,
Mhm.
what are the investors' communication, how to deal with the property
Yeah.
managements, all the stuff. So yeah.
Yeah. I mean, you can definitely learn from passive investing. I mean, um, when I logged on to start the podcast, I was working on, sending investors a report on one of the properties, and
Yeah.
there's a lot of good lessons in there. It's,
Mhm.
hey, we just changed a property management company. Here's why we changed the property management company. Here's our priorities going forward with the new property management company. Yeah, I mean, as a passive investor, you can definitely learn, parts pieces of the business.
Yeah.
But yeah, I like what you said as well, is don't get trapped in the analysis paralysis. Um, jump in and take action, and that's really where you're going to learn.
Yeah, absolutely. All right. So, Brian, you have done many multifamily deals, right? Is there any specific deal where you encountered some issues, problems, some roadblocks? And if you can tell our listeners, what kind of roadblocks did you came across and how did you
Yeah.
mitigate those risks?
Wow. Every deal has something, you know. I mean,
Absolutely. Yeah.
it's not there's been a challenge in every single deal we've had. You know, the
Yeah.
one that I'm referring to right now, um, you know, we had a property management company that wasn't doing well managing. They weren't bringing people in. They weren't leasing, you know, vacant units very quickly. And at the same time, we had a contractor that, you know, wasn't turning units, you know, and
Mhm.
it's we would vacate a like not renew leases to get a bunch of units, you know, open and just have a contractor come in and just do, you know, 10 at a time or 20 at a time. And that wasn't happening. We weren't getting units renovated. The property management company wasn't filling the you know units that had, you know, come out. But yeah, end of the day, you know, our occupancy just started dipping and dipping and dipping and dipping. And um on this particular property, I'm not the asset manager. I'm not controlling member in the property, you know, so I don't have a lot of control over it. But, you know, I had a lot of calls with, you know, the guys who are working in it. And yeah, the biggest thing was, okay, you know, something's not working. And at first, you know, the finger was pointed at the contractor, like, man, you know, the contractor's not delivering units. They've been here for 3 months and they haven't been delivering, right? And so
Yeah.
at first it was try to get that contractor going, but you know, we put a second contracting company in, and when they started putting units out, we realized the property management company wasn't leasing them. You know, they weren't
Yeah.
able to get those leased up. So ended up doing a change of property management as well. And, you know, now things are on the up and up. So a lot of it is just good old fashioned problem solving. It's like, okay, you know, where's the holdup? Where's the problem? You know, at first we thought that the contractor was definitely part of it, but you know, at first we thought it was, you know, hey, let's the contractor looks like is the pain point or the problem in this case. And then we started getting that fixed and units started getting pushed out, and then no leasing activity, right? And so
Mhm.
end of the day, it's a lot of problem solving. It's a lot of, hey, this is what's going on, and recognizing when you have a problem and getting in and trying to fix it quickly.
Yeah, absolutely. And I would say this would lead to a next question. When you said about, the operator
Mhm,
who was, had a major stake in this multifamily property. He was managing all the operations, and
mhm,
maybe, I'm not sure, but maybe he wasn't able to foresee this in certain time period,
mhm.
all these problems. So how would you normally, like, as now, if you have to select someone as a partner, how would you evaluate that partner, up and down the chain, I would say?
Yeah. You know, I actually did this evaluation. You know, I look at their track record, you know, look how long they've been in business. And, you know, this particular partnership, you know, I won't throw names out there, but they own, you know, roughly 6,000 units, you know, and they've come full cycle on a lot of properties. This was something that was definitely in their wheelhouse. You know, it was something that they could definitely manage because they were managing a lot of other
Mhm.
things like it. And you know, looking at the performance of the other properties was something that I was very interested in. Talking with other people that have partnered with them, other people that have invested with them. But really, end of the day, I think track record is the biggest thing, and they had a solid track record. Now, I mean, you know, I've been in this deal less than a year, and you know, so far it hasn't performed great, but it's a 5-year hold, right?
Yeah.
We still have a long time left. You know, to date, they have turned it around, you know, and they've unstopped the plugs in a lot of places. And, you know, units are getting leased, units are getting renovated. The renovation plan has, um, so yeah, you vet the operators, you look at their experience, you look at their track record, and in this case, it's still an open book. I think the deal's still going to do okay. We just had a little bit of a snafu up front, and rectified it. We're moving on, and quite frankly, stuff like this happens in just about every single deal that I've been a part of. There's always challenges, there's always problems, there's always things that don't go efficiently. And if you're the asset manager, it's your job to pinpoint that stuff and fix it. Fix the process, fix the people. It's usually people or processes, but you fix it.
That's where experience come in place, right? So Brian, we almost at the end of our show. So just keeping time in mind, maybe we can go to our final round of questions.
Sure.
Are you ready?
I'm ready.
All right. So the first one, which is the book that you'll recommend to our listeners, the one that had the most impact in your life?
The one that's had the most impact on my life is the Book of Mormon. All right. Well, hands down, 100%. You're probably thinking more along the lines of business books. And I would say if I had to answer it on a business book, the book Traction by Gino Wickman.
I love that book too. I recently completed that book before a month. Yeah. That's
and
good.
I mean, what I like about that book is it's a roadmap, it's a recipe. It's not entertainment. It is a recipe. If you go through that book and you just sit down and do everything he says, I mean, boom. It's how to operate a business. It's a manual.
All parts of the business, right? It gives a very good idea of how you need to operate, hire, fire, whatever comes in the business.
Yep, exactly.
That's great. The next question, what is the best business or investment advice that you will give to our listener?
Find somebody who's done it before.
Yep, same as me. I 100% agree with you. Learn from the person who has done it before, use their experience, leverage their knowledge, and gain from that. Yeah, absolutely.
And with the Traction book, I've hired an EOS implementer to help. I mean, somebody who's been there to help us implement that book. So, yeah.
Nice. All right. How would you, or in other ways, what is the one way you like to give back to the world?
I like very personal ways to give back. It's just as personal as possible. I think things that tear at my heartstrings, things that can be solved pretty easily with money. Food programs, help people who are hungry, have something to eat. I've been known to walk into Subways, buy sandwiches and hand them out before. But I think the problems that can be easily solved with money, food and housing, that's where I'm giving most of my charitable donations to, is things that solve those problems.
Great, man. I also normally I focus on education, providing education for the kids who are not that privileged, especially back in India. There are, of course, kids all over the many part of the world which doesn't have those privilege. But it feels, it gives some relief to the heart, like you have done something good.
Absolutely. Absolutely.
So the final question, Brian, how can Decoding Cash Flow listeners get in touch with you?
Depends on what they're looking for. As far as investing, if anybody is interested in passively investing in, Salt Lake City with the 10 to 20 year holds, the website streamlinecapitalgroup.com. We also briefly touched that I do have a multifamily education program that's aimed at people who want to learn how to syndicate. Website there is thetribeoftitans.com. And I'm also very active on LinkedIn. So, look me up on LinkedIn, click the follow or connect button, and I'll be in touch.
Awesome. All right. Thanks a lot, Brian. Thanks for your time. Thanks for coming on the show.
Yeah,
It was a
appreciate it.
pleasure having you here. Yeah, thanks.
Thank you, Ted.
Thanks for listening to Decoding Cash Flow, brought to you by Aster Capital. If you found value in this episode, then please share it with someone who you think could benefit from it. And make sure to act on what you've learned. If you want Ted Patel to personally help you reach your goals, then feel free to set up a one-on-one call with him. Also, visit us at astercapital.com for more free resources. Content of this podcast is for informational purposes only. As always, please consult your own advisor before making any investment decisions or setting a course of action. Thanks again for joining us on this episode of Decoding Cash Flow, and we'll catch you in the next episode.